The morning report for 10th of May 2011. The big news this week is the budget, which will come through tonight, and I certainly hope the government keeps state secrets a lot better than they do keep the budget secret. There's been a lot of leaks going on, but my guess is we're expecting a pretty harsh budget. There'll be a lot of cuts coming through, and certainly some tax cuts as well, but there'll certainly be a lot of cuts to spending coming through. I think this is going to be quite a tough budget. As such, I think the government is trying to get as much information out there as possible to make sure that us, the end users or the constituents, are well aware in advance of any nasty surprises. Now, typically, like all budgets, there'll be a big frenzy tomorrow of discussions in regards to what has and hasn't been announced, but the devil is always in the detail, so we will give you an update tomorrow morning. However, we'll keep an eye on the budget over the following week to really find out the nitty-gritty details of what's going on through the budget. In the meantime, let's take a look at the markets. The Dow Jones was up slightly last night, up 0.5%, closing at 12,638, still holding its ground around these levels, and certainly with the Fed Reserve saying they're going to keep interest rates low, that's going to buoy that market. The S&P 500 and the Nasdaq followed suit. Now, our market did go up yesterday. We closed up 0.32%, or up 15 points, to close at 4,832. Now, the heavy lifting was getting done by the energy sector and the mining sector. The financials were rather weak, and so were the banking stocks. So once again, we're seeing just a couple of the major sectors pushing our market up. There still looks like a bit of weakness in the market, so I would not be surprised to see the market pull back. In fact, I would welcome it slightly, because I am looking to pick up some more shares in the market at slightly cheaper prices, and a little pullback would be fit in nicely with that strategy. The All Ords, so the ASX 200 closed at 4,757 points, still within that trading range between 4,500 and 4,800, obviously up to the upper end, where we think it'll stay for the next 2 to 3 years anyway. So keep an eye on the marketplace, and certainly if a little drop does come through, I'll be picking up a few stocks to add to the portfolio. Now, the Aussie dollar is sitting around 1.07 US dollars at present. Obviously, this is above parity. And cast your mind back 2 years ago, and we were calling for the Aussie dollar to go above parity with the US dollar. Seemed highly unlikely back then, but these things do take a long time to filter through sometimes, and now we see it. Obviously, it is hurting our exports a little bit, but you know, it just goes to show that the economy is the economy, and you can't really stop it. Our economist here, Daniel Goulding, is now calling that he expects there could be a slight recession coming through, and GDP figures are certainly starting to point in the negative, and that certainly could happen as well. So keep your eyes and ears out for that one. I think we're in for a tough economic time over the next couple of years. Interest rates moving up, jobs dropping off, and certainly housing prices coming back, all point towards a very tough time out there for the end user and the consumer. For any questions or queries, please go to our website at growyourwealth.com.au.